Hi everyone, welcome back to the channel. Today I want to talk to you about being careful, being super careful when you engage in shameless cloning, which is essentially this concept that was made famous to me anyhow by Mohnish Pabrai, and that is following these super investors, seeing what they buy and sell, and doing as they do because they've proven themselves. In this video, I'm going to talk about the pitfalls of doing that. And I'm going to give you a specific example, that is SRG, and what kind of situation a new investor may find themselves in. If you find this video helpful, I'm also going to analyze SRG briefly. If you find this video helpful, please hit that like and subscribe button, and let's get into it. So a quick backgrounder for those of you who don't know, any investment manager who invests more than $100 million in the US must, after 45 days, file a 13F, which tells you what it is that they are currently holding, okay? And this kind of information can be found on websites like Dataroma, and you will find basically the activity of super investors like that, Mohnish Pabrai being one of them. Now, Mohnish Pabrai himself, okay, which is a relatively proven investor, has talked about shameless cloning many times. Shameless cloning, I already explained what it is briefly, but if you want, just Google Pabrai shameless cloning and you'll find a lot of information that you need. Now, there's many times the issue with shameless cloning is it's great it's kind of a tool is the way I see it. And all too often tools are misused. Now, if we look at this video here, it's actually by Brad Kellner, Stock Compounder. Okay, and I just want to look at, so that, it goes, I want to look at some of the notes here, and you can see, or rather the replies. You can know, it seems that Pabrai's actions do not align with his speeches. There's a couple of basically, what the point of cloning super investors is. So this is what can happen when I believe it is done wrong. And maybe some of these super investors, maybe some of the blame, is in fact on that super investor. I go through great care in my videos to say, look, I'm just giving you my opinion. I write it right in it. You do what you do you. I'm telling you what I'm thinking. Okay? But let's go over what happened. Basically, Mohnish Pabrai actually put out in April, okay, so two and a half weeks ago, he put out this video, and essentially in this video, I'm going to play it, but he says they're completely out of Seritage Growth Properties. Now, what happened? Let's do a bit of a look, okay? Seritage Growth Properties, in and around when the pandemic started, dropped to almost $6, was it? Around $7, let's say, okay? And Mohnish Pabrai got in, okay? He got in heavy in there. Now, what happened is, of course, many people got excited and shamelessly cloned. Now, this is the problem. This is a problem with using a tool that you may not understand well, and I am guilty. I was guilty of this. I have done this, where I look at someone like a Warren Buffett and think if he's buying the airlines, these things are infallible. They are perfect as a perfect investment. It's not always like that. Maybe some of the blame, like I said, should be on some of the super investors to better articulate that, hey, this is my opinion, you do you. I don't know. Maybe they should, maybe they shouldn't. Maybe most of the blame is on us for following them. But in any case, here's what happened. Seritage Growth Properties, it looked really good. And it looked like it was really cheap in and around here, coming from, the 50s, right? From the 150 mark. Wow, like it's being had for 1/10 the price. Okay. Then we find out that in fact, Mohnish Pabrai has completely sold out. Okay, he started selling out in the last quarter of 2021, and in this quarter, he's basically completely out. Interesting note: Guy Spear, not out, but look at the size of his position, 3%. Right now, those of us who may have done what Pabrai did and entered large here, it's possible, depending on when you entered. Now price is at 8.3, that it's possible that you are in significant drawdown, because many times you think to yourself, well, if I bought here and I think it can back up here, I have a lot of way to go. But if you think about it, now you're at least a 50% drawdown, and now you're wondering, what do I do? So what I want to get at is sometimes these super investors make mistakes. If you watch this video here, okay, Mohnish Pabrai basically says that.
And all of that with all the lockdowns. And I analyzed it, and it looked really cheap and looked like there's very significant upside because they were redeveloping all the old Sears space and such. Last year, I concluded that I had made a mistake.
There you go. You had made a mistake. And so what I want to tell you, I want to share my experience with you. If you have already done this, or if you're about to go and shamelessly clone, I have been burnt doing this. I have made that mistake where I think I'm just going to shamelessly clone, buy and sell with another investor. And I have basically bought way later than them. So I bought at a higher price and sold after them and sold at a lower price. And you may be in this position right now if you're watching this video, or hopefully you're not, but you may be considering shameless cloning. And my answer to you is what the conclusion that I've come up to that is working for me is you have to understand no matter how great these investors are, they make mistakes. And if you choose to put your money on the line, that's on you. I understand how it's difficult, but we have to own that. I had to understand that and own that when I lost a good chunk of money, when I did that the first time and I lost a lot of money, that's on me. But the right way that I have found what works for me is I will watch what they do and then I will analyze and ultimately have my own exit plan. That's what it comes down to. So I know it's exciting when you look at Seritage and it's down here and you find out Mohnish Pabrai bought it and you're seeing price start to do this and you're like, oh my God, I missed out. Obviously he was right. Look, we're up to 24. I get that. I get how exciting that is. And I've been on that emotional roller coaster. And my answer to you is you have to find a way to say to yourself, I will not press that buy or sell button until I have my own exit strategy. And it has to be real. It can't just be a fake one where you're just like, okay, I'm good enough, I'm going to go. No, you have to have your own proper exit strategy. And that is what has been working for me. I actually did clone Mohnish Pabrai on this investment. And what happened is, in a nutshell, if you watch this video, Mohnish Pabrai talks about how he found out, essentially, I'm very much, simplifying it, but the redevelopment costs, he underestimated them. And it's interesting because I did get into Seritage. I put a very tiny position in just to kind of start watching it. And, as I saw it move and kind of, I put a very small, yeah, actually you can see it. It's actually right there. That's where I entered. Very small position. I saw it kind of go up and down and eventually, I don't remember exactly where, in and around this area, I concluded this I want out. And it was actually the exact same reasons. It was exactly that I felt that it's not that it's not cheap, but that it's going to run out of capital. And so now I'm going to analyze SRG. I'm going to tell you how I came up with my conclusions, how I came up with that. And it's okay to disagree with these super investors. This is my main point. And it's not that I was smarter than Pabrai, or definitely I'm nowhere, but I came to this conclusion apparently sooner. And that's fine. Okay, and that's fine. So I want to talk to you about, actually, before I start breaking down SRG, here's the main point. Somebody made a pretty interesting comment over here in this video in that his actions do not align with his speeches. Here's my thoughts on that. I hate to say this. I think I agree to a good extent. I think we really, if you are in this game long enough, you will learn to take a lot of what the super investors say, take what's good and works for you, and take a lot of the rest of it with a grain of salt. I know that's probably, I know many maybe many people on YouTube will disagree on that. What I'm trying to say is, even what I'm saying here, take with a grain of salt. Go find what works for you, what works within your mental framework, your own mental framework. That's the most important thing, in my opinion. Much more than knowing a better method is knowing your own mental framework and figuring out something that works mentally for you. Okay. And do I agree with what this comment here on the screen? To be honest with you, you see Mohnish Pabrai talk. Let's talk about his record, right? He talks about buying. And yes, I know you can say, well, people buy for one reason, sell for many reasons, but yeah, if you look at it, he bought Alibaba, then got out of it very quickly and bought Tencent. What changed so quick? Here, Pabrai, at least, here it wasn't that long, but Graph Tech, you can get into Graph Tech. things can change. Now, each one of those, like with GrafTech, you can say, well, things changed, right? The thesis changed with Pabrai's purchase in GrafTech, EAF. But what happened when he bought Alibaba, then quickly switched to Tencent? If you were shamelessly cloning there, now you're left with this large position potentially in Alibaba, wondering, what am I going to do? So make sure you do your own research. Make sure it works for you. Now let's break down SRG. I'll show you how I came to my conclusion that it's time to get out. If you look at it specifically, SRG, let's look at their income statement, okay? If you look at here, look at their operating income line. Look at they're constantly running a negative income, and that's understood as part of the thesis. What they're essentially doing, okay, you can see that their net income here is consistently negative, okay? And if you think about what they're doing, to break it down easily for you, is they are actually selling off properties all over the country and using the proceeds to fund, to basically emerge as to fund several really good properties and basically that are going to be profitable. And so what you see is if you go to their balance sheet, okay, and you look at their total equity, just take a look at their total equity line. Their equity is dropping and dropping fast. Do you see that? So why is that happening? That's because, of course, like I said, they're selling off properties, okay? But here is what did it for me. Here was when I realized I believe there's a significant issue. If you see what is killing their equity, take a look at this area up here. If you notice, it's their assets are not particularly, I mean, their assets are dropping as well. But specifically for me, look at this debt, this orange line, liabilities. Their debt, if you come down into their total debt, okay, yes, it fluctuates, but I thought about it. Their debt to equity ratio is starting to look really bad. And more of their equity, in my opinion, is going to have to go to servicing that debt. If they want to do some of this redevelopment, that debt can really pile up. And I feel like that will essentially, there's a high risk of bankruptcy. So that's the first thing. The second thing is, it was the redevelopment costs. So what it was is, as I think of their long-term debt over here, okay, which kind of went up here, then, okay, so now it's a bit lower. Actually, let's look at the quarterly, sorry. Let's look at their quarterly. Yeah, so now, okay, so now you're looking at it, they have to service that much debt, but they have no income. So a lot of, as they sell off a building, let's say this is a building, okay, a building, as they sell off one of these buildings, okay, let's say this much of it, simply put, has to go to service the debt. And my concern is it's going to go higher. And when you look at the development costs and the development timelines, they're very difficult to, there are many different properties, many different municipalities. That's essentially what Mohnish Pabrai got into. And for me, I realized I don't have my own exit plan that I feel comfortable with. And I need to accept that. And I got out. And that was basically the issue that I found with SRG. So I'm out of SRG. I've been out of it for a bit. And this is basically my opinion. So basically, to conclude it, be careful. Be very careful when you follow these super investors, because it's not that, because there's an argument to be made that they don't follow follow what they preach. There's an argument for that, and I know you can say there's counter arguments, but I'm just saying there's some evidence that is part of it, and it's not purposely done. I just think humans change and humans are different. That's the first part, and the second part is, I think if you just choose to follow if you choose to shamelessly clone, have your own exit plan. Don't worry about the market taking off on you. Make sure it works for you yourself. Make sure that investment works within your own mental framework and you know what you're doing. Don't just give your account to me or to somebody else to just essentially, unless you're actually going to give it completely to that person and give your money to Mohnish Pabrai to invest, because he'll buy it and get out. You are always going to find out later. So that's my information. That's my advice. What do you guys think about this? That's my opinion on Mohnish Pabrai. I love the man. I've been following him forever, but that's my opinion. What's yours? And I'd love to hear it. Please hit that like and subscribe button. Leave your comments respectfully in the below. Have a good one.